Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 5th of April here in 2023. As we go into a holiday week and holiday weekend, we'll have Friday as a holiday, no trading on Friday. Where are we in the market? In the midweek. Midweek of a holiday again. Just looking at the broader picture, the S&P, this is your S&P futures, is back into prior resistance. I have a little box drawn really at this 3800 and just under this 4200 level. And the market, I've been focusing on mostly throughout 2023. But if we take that for a bigger perspective, the market, with a little exception here and a little exception here, has stayed within the trading range. And again, that is roughly 3,800 and 4,200, a little bit shy of that. So that's going to be, think of it like the Charlie Brown pattern, just a rectangle, just a sideways box, trading volatility box, as Don would call it. But it's just a nothing burger. It's gone sideways despite a recession bear market. Can this be called a bull market? I don't think so yet. It's just sideways and choppa sloppa. That becomes a little bit clearer if you see it on a bigger screen. What about the NASDAQ? Is that true with the NASDAQ? Partially. What levels are to blame in the NASDAQ? 13,500, and I'll make a little exception. Let's go simple terms, 11,000, with a little peak above and a little couple of peaks, three peaks really beneath that spot. And everything else is sideways. And a quick note on the Dow. The Dow mini futures, they have been sideways a little longer and are a little bit closer to the top of its range. And the Russell has played itself in a trading range, volatility box, rectangle, just under the 1,700 and just above 2,000. On the short term, that's where we are. But where can we put this on the big picture? We've had choppa sloppa for an entire year. And if you've been with us in Theo since that time, most of the evening videos when I discuss the Russell through the entirety of 2021 was the box, was the rectangle, was the sideways action, the short or bearish trades that take place above, and the bullish or the buy trades that take place beneath the support level, into the support level, and the midpoint being the target. That is a much wider range here in the Russell. And if we go backwards from the bottom, Russell to the Dow, not the same, but its trading range has been a little longer. It's been the NASDAQ which had the brunt of the selling through the last year. And that's on the back of the interest rates going up. While we're on the topic, let's see the bond market. There's your trade yield, or the interest rate, 10-year Treasury note yield. That's 0.5% all the way to 0.4, or 4%, almost 4.5. We are coming down from that level, and that is sending a bullish bid into the bond market. That interest rates coming down a little bit, and this new realm, or this new world that we are in, with a risk off type of mentality, and that is sending capital into the bond market without concern to those yields. Bonds are becoming a little more attractive, and of course, as the financial crisis, which is still out there, we had Jamie Dimon discussing his thoughts on the financial crisis, and the market has some bumpiness ahead, and the financial crisis is here to stay. Headline news, just one person's opinion on it, but one that we would look up to as someone that knows a little bit about the banking sector. And nonetheless, traders are picking up on that with the retail banks, again in focus. KRE is your regional bank ETF. That is, on the daily chart, just about at new lows. Remember the fear and the trepidation and the selling that took us down here at the beginning of March. As we begin April, prices of the KRE regional bank ETF just about, actually technically lower on the chart than where they were at the heart of the financial crisis. Therefore, it probably has a little more to continue. XLF, there's the trading range for XLF, 36 per share, and around that 30 or 31. And if the banking sector does fall lower, market will be pulled with it. That would take, now we're into targeting, the S&P down from its resistance back to its 3800. And other numbers would be there for the NASDAQ, taking it down from the 13.5, just under it, back inside toward about the 12,000. And that would be probably on the back of leading stocks which have and remain short positions. That could include Tesla, down from the 200 per share level, AMD, which is off the 100 per share level, Amazon, we think of it as a technology name, but it's actually filed under the XLY because it is retail consumer discretionary. That's off the 105 per share. And Nike, just a retail stock. PayPal, weak, getting weaker. And PayPal, as a online transaction company, is under where it was trading at the financial, not the financial crisis. Financial crisis was here. At the pandemic lows. That's early 2020. Not a lot of stocks share that specific news or specific characterization, that they are cheaper now than they were at the heart of lockdown. PayPal is one of them. And of course, NVIDIA is a pullback from its 280. I was curious about which stocks. Oh, before we talk about the stocks, let's look at the commodities. A big news event happened these last couple of sessions in crude oil. It was that the OPEC had decided to cut production of their oil production supplies and quotas and goals, and that sent oil, at least in one session, surging roughly 8%. And it has stayed at those lofty levels. But this is why we look at those ranges and think about mean reversion for trades. Just like the S&P. Now, sometimes mean reversion fades or shorts from above, longs from beneath these support levels, can take a little bit of time to play out. Sometimes they happen very quickly. There's that Charlie Brown pattern. That's Peanuts. Charlie Brown, Lucy, and Linus, and all those from the comic book strip, that he wore a little yellow sweater with a black checkered or black sort of almost like a heartbeat pattern. It looked like that. Call this a Charlie Brown box. Nonetheless, markets can go a little bit above it and a little bit beneath it and can ultimately come back in. That's where options, I think, are a much better play than long the shares or long the futures contracts for a swing trade. That way you have defined risk about what you pay for your spread, or if you just pay for the long-dated call or the put. You can sustain, even if you go long here and the market takes a dip, your call option will be worth less, even could go to zero. But if you hold that option to expiration, or at least hold it beyond and quantify your risk as what you're paying for the option, it can come back to life. We've had to have it many times with trades that initially go wrong, but are able to come back to life a week or maybe sometimes even 2 weeks later. And crude is going to fit that bill of a stock that went outside of its range and came right back in. A market, I should say, not a stock. But on the back of it, if you're playing outside of the commodities, quick note about that risk off. Gold got its breakout above the 2,000 per ounce level, up to 250, and we're 2,050, and we're watching that closely. If any other signs of risk off means I don't want to be in the stock market, I don't want to be in the bond market, I don't want to be in currencies. Give me gold, and that actually can play a defensive risk off hedge. That's been a large part of the financial, I keep saying financial crisis, but the regional bank run on the banks. Gold was a big beneficiary of the risk off, pulling money out of the equity market, plunging it into the safety, in this case of gold. And that now we can talk about the individual stocks and the plays. So even without looking at crude coming off its lows, there's a couple of stocks that are outstanding. And they are the standards. That's ExxonMobil, which it is not that far from another new 52-week high. It is not at the same level that crude oil is, and it sustains this persistent uptrend. Speaking of, which stocks are making new 52-week highs in today's session? Let's talk about McDonald's. McDonald's, we discussed that a little bit earlier in the sessions today, about it's making new highs. It's a burger company, but it's still, the stock is making new highs. Mondelez, Regeneron, Progressive, Boston Scientific, Activision Blizzard, one of my personal favorites, Hershey. Let's see these before we conclude. There is Oracle, Strong stock getting stronger. 52-week highs, they've been making it since November, are continuing off on the long side. There's the sneak attack of McDonald's, a stock that is not boring, but persistent and consistent. It's going up, but it's going up over time with a quite volatile, bouncy, choppy upper range. And McDonald's has been on a tear. That thing has been grilling and cooking to the upside. And that is playing above all these levels and consistently making new 52-week highs. A few others include Mondelez, again similar, not as a company, but as a stock, grinding its way higher slowly over time. Nonetheless, strong, getting stronger. We've seen Regeneron come up quite a few times in my scans and evening videos of another stock that's strong, getting stronger, and it had a new 52-week high. And the others we've talked about, Progressive, and that trend line there was from a few months ago with the bull opportunities. Progressive keeps going on the bull side, and that trend line is stronger. So long opportunities on pullbacks as this strong stock gets stronger. Activision Blizzard, not necessarily the same caliber as the others in terms of persistent uptrend, but we'll finish with Hershey, which does fit that bill. Not only is the product delicious, but their stock looks pretty appetizing from the long side. It's tough to get a buy into stocks that are this overextended, so the goal would not be to buy it now, but keep this on your watch list and keep this on a buy program list whenever the market decides to pull back. That gives a little bit better risk reward, not buying a strong stock getting stronger, just outright buying it, but buying it on dips, pullbacks, or retracements. Any stocks making 52-week lows today? Only two of them in the S&P 500. Citizens Financial Group, which is a big sell swing from its financial crisis, again, in a better term for that financial situation. And then not related to financial, Dish Network, DISH, which has been on a persistent weak downtrend ever since peaking in late 2021 and making new 52-week lows under $10 per share. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for April 5th, 2023.